Hello and welcome to today's video. Last week was packed with earnings reports from several intriguing companies, and it was all wrapped up with the latest unemployment data. Without further delay, let's dive in. In today's video I will speak about traditional and crypto market weekly performance, earnings reports from companies like Palantir, PayPal, AMD, Google and others, unemployment data, and for the end I will discuss about upcoming events. Looking at the traditional market, it was a pretty solid week for the S&P index, which ended nearly flat. This was the overall result despite weekly sell-offs in companies like Tesla, Alphabet and Microsoft. The general crypto market is currently showing signs of weakness, with the total market cap sitting at 3.1 trillion, having previously dipped to nearly 2.8 trillion. While Bitcoin is attempting to regain its footing, altcoins are starting to lose momentum. It will be interesting to see if the crypto market can demonstrate signs of strength as it often has in the post-halving years. Last week, Palantir reported impressive earnings, leading to a 30% increase in its share price over the week. The standout figures included a 29% year-over-year revenue growth, reaching $2.865 billion. Net income came in at $462 million, translating to 0.19 cents per share. The company expects its revenue to grow to around $3.7 billion. While the stock is currently priced at $110, there are a few concerns worth mentioning. For instance, stock-based compensation was huge, $691 million. If we factor that into their earnings, the total net income drops by 59%. I understand that with the stock surging, most people aren't worried about this right now. However, when the momentum slows down, these kinds of expenses could seriously hurt shareholders' value in the long run. Additionally, if we use their 2024 EPS to calculate PE ratio, we get an unusually high value of nearly 579. To put that into perspective, even with a 400% year-over-year increase in earnings, the company PE ratio would still be over 100. Another company I'm watching is PayPal, which released its Q4 and full year 2024 earnings last week. Annual revenue grew by 10%, while net income dipped slightly by 2%. However, earnings per share increased by 4% to $3.99, partly due to their share buyback program. They plan to continue these buybacks in 2025 with a new $15 billion authorization. Despite this, PayPal share price dropped 12% last week, which might be an overreaction. The company expects earnings per share to grow between 4.8 and 4.95 in 2025, up from $3.99 in 2024, a 20% year-over-year increase. Last week, AMD reported its Q4 and full year 2024 earnings, showing growth in almost every key segment except gaming. They are expecting Q1 2025 revenue of $7.1 billion with a potential $300 million uncertainty. Despite strong earnings overall, the market had a weak reaction as the stock price approaches levels not seen since late 2023. I was getting really interested until I saw their stock-based compensation, which was higher than their annual net income. For me, this is a major red flag. While the company performs well in most areas, that level of stock-based compensation is just too concerning for me personally. Next we have Alphabet, and these earnings are truly impressive, with annual revenue growth of 14%, reaching $350 billion, and an EPS of $8.04. Despite the strong earnings, their shares dropped, which isn't too surprising since the stock price was already near all-time highs. After the earnings release, it fell 12% and is currently trading at $185. What makes Alphabet interesting is its low PE ratio, currently around 23. Considering their 14% year-over-year revenue growth and 40% EPS growth, that PE ratio is remarkable. Last week, Uber reported strong earnings leading to a 10% increase in its share price. Revenue grew by 19% compared to last year, and the company posted an impressive EPS of $4.56. However, it is important to take these earnings with caution, as Uber benefited from a significant tax break in 2024. This has led some analysts to predict a potential 46% drop in EPS for 2025. Another notable company that reported its Q1 2025 earnings is Qualcomm, a technology firm. They showed growth across all key areas, including revenue and EPS. The company also repurchased 11 million shares, increasing value for shareholders. For Q2 2025, Qualcomm guidance includes GAAP revenues between 10 and 11 billion, with GAAP EPS ranging from $2.38 to $2.58. With the share price currently 37% below its all-time highs and a very low PE ratio, Qualcomm seems like a company worth watching. While many companies had solid earnings, Amazon performance stood out. Rather than focusing on their numbers, it's worth noting their planned capital expenditures for 2025, which could reach around 100 billion. When you consider that companies like Meta, Microsoft and Alphabet also plan to spend over 50 billion in capex, it's clear we're entering an exciting period driven by cloud and AI services. The latest unemployment rate came in at 4%, showing a decrease compared to the previous month. This rate hasn't been seen since May of 2024, indicating a stronger labor market. As a result, it suggests the Fed may keep interest rates steady for a longer period. Following this, the current odds stand at 92% in favor of keeping interest rates unchanged at the next FOMC meeting in March. Looking ahead to the upcoming week, we have another busy earnings season, although personally I don't find it exciting as the last week. Still, there are a few interesting companies to keep an eye on. On top of that, we'll get the latest CPI inflation data, making it another week full of potential market-moving events. That's all for today's video. I hope you like it. If you like it, subscribe and like the video as a sign of support and nothing. Watch yourself and see you in the next video. Bye!